If you've seen the movie The Wolf of Wall Street, you should already be familiar with the term pink sheet or penny stock. But if you're not and you're going to invest in the crypto market, this may be already too late. In the cryptocurrency market, there are big and respectable names like Bitcoin and Ethereum. A lot of other altcoins such as Litecoin and Monero that can be compared with the blue chips. And there are other shady coins that come and go really fast and are known as the shitcoins, something similar to the pink sheets. Well, not all pink sheets are scams, and also not all altcoins are shitcoins. But there are people arguing that no matter what they truly are, they can work like an elevator. You just jump in, wait for it to reach the moon, and jump out at the right time, which is something that is not going to always happen. If you're an investor and relatively new to the cryptocurrency space, I highly recommend you continue watching this video to invest more wisely in this space. So, let's review the terms first. What are pink sheets, or the penny stocks? Pink sheet listings are companies that are not listed on a major exchange like the New York Stock Exchange or Nasdaq, and are often traded over the counter. The name came as the stock codes are circulated using pink-colored sheets. The majority of stocks sold over the counter are low-priced penny stocks, meaning that they are traded for less than $5 per share. However, there are a large number of companies not considered penny stocks that prefer to sell their shares through the over-the-counter network to keep the share distribution activity inexpensive. Wolf of Wall Street movie is about pink sheets, and actually based on a book written by the real Jordan Belfort, who is the main character of this movie. If you are interested to learn more about the pink sheets, I strongly recommend watching that movie. What is a shitcoin? The term shitcoin refers to a cryptocurrency altcoin with little to no value, or a digital currency that has no immediate and discernible purpose. The diminished value of a shitcoin is often due to a failed investor interest, because it was not created in good faith or because its price was based on a speculation. As such, these cryptocurrencies are considered to be bad investments. Many cryptocurrencies are sort of pink sheet stocks, but the pink sheets are not illegal either. So, like the pink sheet stocks, not all penny cryptocurrencies are scams. There are good ones, but they need to be handpicked with enough knowledge, experience, and risk management strategies. Should you buy penny cryptocurrencies? Well, that depends. Even picking one penny cryptocurrency might change your financial life forever, in a good or bad way. At the time of creating this video, based on the data from the CoinGecko website, there are almost 6,000 coins in the market. So it's not hard to find a bunch of penny cryptocurrencies. As you can expect, most of these coins will not be valuable in a few years, and only a handful of them will become successful projects. Some people may argue that even if 80% of your investment fail, the rest of them may get you rich. But with the whopping and already growing list of crypto coins, this strategy requires a shitload of money. Why people are actively looking for these shitcoins? Well, you may be surprised that some people even search for the term best shitcoins. And there are even some shitcoin clubs on the internet. I find it very awkward to type the words best and shit together. But why exactly? And I'm not talking about a best shit. I mean, why exactly people are looking for the shitcoins? Well, for various reasons. But the main ones are greed and lack of knowledge. There are other reasons for sure, but these two factors can affect them too. Greed. Some people are actively looking for the next Bitcoin or the rocket ship to the moon because they feel that they missed out on the crypto boom. They see the BTC prices and how it went from cents to thousands of dollars and feel that they have missed that train. When they look further down the list, there are new coins in the market, and they resemble new opportunities. They are priced less than $1, and in some cases even less than a cent. With $100, they can buy a shitload of these cheap coins. They just imagine a future in which these coins become another Bitcoin and they will become super rich and millionaires. But with great reward comes a great risk. You have to learn your lesson. If you're lucky, you learn those lessons and wind up as a savvy trader who trades well whether the market is up or down. But the odds are against you. Human nature is against you. Emotions are against you. Everything is against you. And yet, there is hope. Lack of knowledge. The price to becoming a good trader is really, really high. In the world of investing, nothing can beat the knowledge you gain about an asset from your personal research, and in fact, it is much needed. Blockchain is a complicated and technical matter. There are a lot of pieces involved, and you should at least have some basic knowledge like the meaning of the circulating supply, the market cap, and how the prices of these coins are engineered. You should know if they are mineable or pre-mined. Can new coins be minted in the future? When you want to invest in a new coin, check sites like CoinGecko or CoinMarketCap to see some stats and rankings. The maximum supply of a coin is something that the developers decide in the early days of the development and prior to the release. The circulating supply can be less than that, and in most cases, it is. Every precious asset or metals like gold have a limited supply, and that's what makes them valuable. The same philosophy applies to the cryptocurrencies as well. In the case of cryptos, the founders determine the maximum supply instead of the nature. Bitcoin has a maximum supply of 20 million coins. If there will be another coin as successful as Bitcoin, but with 10 times more supply, the price will be 10 times lower. In some cases, the developers decide to release only a limited amount of coins. But you have to keep in mind that the most important factor will always be the market cap. Coins with a limited supply have a wild price fluctuation. The opposite is true for coins with a massive supply. The prices move relatively slower than a coin that is having a similar price and less total supply limit. When you open the coin info page on the CoinGecko website, you can see the price chart, which you can zoom out to see how the coin has performed in the past. You also have access to important links, like the homepage of the coin, and you can use it to read more about it. Bitcoin was created to be a peer-to-peer electronic payment system that requires trusting no third party. Ethereum platform was created on a belief that blockchain can do much more than just cryptocurrencies. That's why they introduced smart contracts and a bunch of other cool features. So, what is the purpose of a particular cryptocurrency that you're interested in? Does it solve a real-world problem? If not, forget about it and move to the next one. Note that the same problem would have different solutions. Likewise, a number of penny cryptocurrencies might be trying to solve the same problem in different ways. You have to weigh which one is better. Unfortunately, most of these shitcoins just copy another coins. And with open source codes on GitHub repositories, it's simpler than ever to fork a coin. But a wise investor always checks the GitHub repos to see how much development is going on. You can see the contributors, the started receive, the open issues, and much more. Let's talk about the pumps and dumps. Artificially increasing the price of an asset and then selling to make a profit is known as pump and dump. Doing so is illegal in traditional stock markets like NYSE and Nasdaq, but it was part of those exchanges in the early days. As there is no proper regulation around penny cryptocurrencies, and they are growing like mushrooms day by day, a lot of pump and dump schemes happen. Moreover, it is easy to manipulate penny cryptocurrencies as their prices are very low. Sometimes a crypto whale, who is a trader with a huge asset and market influence, takes part in the pump and dump schemes by moving a big chunk of his assets. Hopefully, there are robots monitoring the publicly available blockchain data, and you can read more about them in the Crypto News website and also subreddits. When the price of a penny cryptocurrency shoots up suddenly, it is better to stay away, as it might signal a probable pump and dump scheme. Also, be aware of unsolicited offers about the information on pump and dump opportunities. Chances are that you are about to pay the price for someone else's profit. If you invest in a coin that has reached the rock bottom after a massive surge in the price, chances are high that it would never recover, and investing in them would be a waste of money. So, analyze carefully why a coin reached the rock bottom. If you see several reasons that the coin might rise again, then buying would be a good option. How can you identify shitcoins? A shitcoin is a cryptocurrency that are there to make money for the people who launched it. Simply put, shitcoins are there to make you miserable. Here are some of the signs to help you identify them. No proper official websites, or the site looks very basic and fundamental. The white paper is not available, or the one available is not professional. The white paper does not explain the project, or can convince you what problem it is solving. The roadmap for the project is too long to launch the product. Even if the product is launched, by the time the crypto market would have got better solutions. The team behind the project is not revealed and stayed anonymous. Unless the team is designing a privacy-based coin, there is no reason to be in the shadows. Social media profiles for the company or the project are not available. The project is not marketed well, and far fewer people know about a project. Search about a project in Google. If you can find them on the first page, probably no one else will, and a project might never get enough traction. They are not audited by known third parties. They are a fork of another coin, and the only difference is the name and the logo. As an example, right now there is a madness going on with some of these food name coins, like sushi, kimchi, yam, and others. They are forking other projects and also each other, and they are being misused for yield farming schemes. It's easy to create a new coin and use it to pump and dump in the yield farming schemes. So, what is the conclusion? If you don't want to lose a lot of money and most importantly, your time, you have to become a good trader. And for that, you have to invest your time and money into learning new skills and gaining the required experience. And don't let your greed fool you. You didn't miss the boat and it's not over. A mere 1% of the people own crypto right now. Crypto can solve dozens of previously intractable problems, like digital identities, supply chain integrity, data breaches, and many, many more. But it's going to take a while. The crypto superhighway is under construction. They are paving the roads and pouring the cement. Some call the dot-com crash a bubble, which it almost was. But look at the companies born right out of that bubble. Google, Amazon, Apple. The internet looked like a joke to some people 20 years ago, and here we are now. Only believe the information from trustworthy sources. If something is too good to be true, you have to keep your senses clear before acting. Luring is a preferred strategy used by many scammers. Emotionally being strong is going to really help you in the way. You need to figure out when to sell and when to buy. Also, you need to stay calm when the things don't go your way. How can you become a good crypto trader? That's a good topic for another debate. But there are a lot of ways to get inside of the market. Fundamental analysis, technical analysis, and also the new on-chain analysis. But the most important ones are letting loose of your greed and also relying on your knowledge and experience. So, don't put your money that you can afford to lose into penny cryptocurrencies. That's it for now. If you like this video, don't forget to hit the thumbs up and subscribe for more tech debates like this one.